If you're watching this video, chances are it's because the crypto market is rallying. Now, even though there are many reasons why the crypto market rallies, they tend to fall into the same old categories.
But please don't put us in the same category.
And that's why today we're going to take a look at the reasons why the crypto market is rallying and whether it's a bull trap or just the beginning of higher highs. My name is Nick. Stay tuned. I'll start by saying that nothing in this video is financial advice. It's just educational content intended to inform you about the crypto market dynamics. And if this is the kind of content you want to get more of, then smash that like button, subscribe to the channel, and ping that notification bell. With that said, crypto market rallies tend to be caused by a bullish macro catalyst, a bullish crypto catalyst, or some epic combination of both. Before we dive into all of these catalysts, though, it's important to talk about the most important catalyst of all, and that's leverage, specifically short squeezes. Short squeezes occur when crypto traders bet that crypto prices will go down, but crypto prices go up instead. The result is that they're forced to buy crypto close to their leveraged positions, and the practical effect of this is that it pushes crypto prices higher than everyone expects, especially in the shorter term. Notably, the same can happen in reverse, when crypto traders bet that crypto prices will go up, but they go down instead. And the result is they're forced to sell crypto to close their leveraged positions. The practical effect of this is that it pushes crypto prices lower than everyone expects, especially in the short term. And this is called a long liquidation. Both long liquidations and short squeezes tend to be short-lived. And this is why if you see crypto prices rallying, the first thing you need to do is to check out a website like CoinGlass to see how much of the price action is being driven by short squeezes. And if you see that hundreds of millions or billions of dollars of shorts got liquidated, then the pump is likely primarily leverage-driven. And this squeeze-driven pump needs to be followed by a high buying volume on spot markets to continue. And if there is a surge in buying on spot markets, then this can trigger an even bigger short squeeze, creating a positive feedback loop that can last for days. And that's why it's important to zoom out and check out where the next levels of resistance are for the coin you are watching. If the rally is genuine, then it will blast through those resistance levels. If it's not, then it would get rejected at the next resistance. Do note that you can refer to our video about crypto trading for beginners if you have no idea what I'm talking about, and that's right over here. Now, two more things to know about short squeezes. The first is that they tend to occur after the crypto market has been chopping or grinding lower. And that's because when the crypto market is chopping and grinding, traders start to feel bearish. So they start to bet that crypto prices will go down by going short. The second thing to know about short squeezes is that whales can and often will hunt short positions on exchanges. In plain English, large crypto traders will occasionally purposely push prices higher to trigger a short squeeze, causing prices to spike much higher than most traders and investors expected. Naturally, the purpose of this is to create FOMO and trick anyone who sold into buying back. And this is practically why crypto prices sometimes rally above a key psychological level or resistance level that everyone is watching, like 10 cents or $1 or the $50 moving average or Fibonacci level. Crypto whales know that many investors will sell just below these levels, and many traders will go short around these levels. So, whales push prices higher to liquidate the traders and cause investors to FOMO back in. And on that note, if you're looking to trade crypto, then you have to check out the Coin Bureau deals page. That's where you will find sign-up bonuses of up to $100,000 on the best exchanges around. And not only that, you'll also get 50% trading fee discounts and 75% cashbacks on those deposits. Now, these deals are only available to Coin Bureau viewers and won't be around for long. So take advantage of them ASAP by hitting the link in the description or by scanning this QR code. Back to the video. Now, this begs the question of how you can know that the current rally is the real deal or just a bull trap, a final pump before an even bigger dump. The answer is twofold, and the first part is to figure out if macro conditions are bullish or bearish. And this might sound complicated, but there's a very simple way to do it. check and see what major stock indices are doing, as well as the US bond yields and the US dollar. Starting with major stock indices, if you can see that the S&P 500 has been rising in recent weeks and looks like it's going to continue its current uptrend, then this is a sign that macro conditions are bullish. Similarly, checking the Russell 2000 or RUT will give you a sense of how much risk appetite there is. If the RUT has been rising in recent weeks and it looks like it's going to continue its current uptrend, then this is another sign that macro conditions are bullish, and it's one that's particularly bullish for altcoins. And that's because the RUT has historically been closely correlated to altcoins. Every time the RUT breaks out, altcoins tend to follow suit, as both asset classes fundamentally lie at the end of the risk spectrum for stocks and for crypto. But of course, stock indices like the S&P 500 and the RUT will only continue rallying if interest rates and liquidity continue to stay loose or loosen further. And this is where US bond yields come in. The 10-year Treasury yield is used as a reference rate for interest rates on loans such as mortgages. As such, a higher 10-year yield is bearish, whereas a lower 10-year yield is bullish. It should be easy to spot the trend. Whereas bond yields are a proxy for interest rates, the US dollar is a proxy for global liquidity, aka money supply, specifically the DXY or DXY. And this is because the world owes tens of trillions of US dollar debts. When the DXY rises, these debts become more expensive, which means costs need to be cut elsewhere. When the DXY falls, these debts become cheaper, resulting in extra money that can be spent elsewhere. And obviously, crypto follows global liquidity. The caveat is that crypto is believed to lag global liquidity by a few months. And this means that when you're analyzing the DXY, you need to focus less on what the DXY is currently doing and more on what it has been doing over the past few months. If it fell a few weeks and months ago, liquidity conditions will remain positive for crypto even if the DXY is starting to rise right now. The catch is that this liquidity will only continue to flow into crypto if investors feel comfortable enough to continue investing in risk assets. In other words, global liquidity only flows into crypto when there are no bearish macro catalysts that are increasing uncertainty, like a trade war or an actual war. So long as there are no bearish macro catalysts like that, then liquidity should continue to slowly flow into crypto. On the flip side, if there are bullish macro catalysts like the Fed being more dovish than investors expected or the Treasury issuing fewer long-term bonds, then this can supercharge how much liquidity is flowing into risk assets like crypto. And that's just because getting bullish macro catalysts against a bullish macro backdrop basically gives a green light to investors to turn the speculation dial up to 11. Good times. Anyways, you'll recall that figuring out if macro conditions are bullish is just half of the battle when it comes to figuring out if the current crypto rally will continue. The other half, the second part of the answer, is to figure out if crypto conditions are bullish. Again, this might sound complicated, but there's a very simple way to do it, and that's to check what major cryptocurrencies are doing, starting with Bitcoin. Whereas the S&P 500 is the simplest proxy for macro conditions, BTC is the simplest proxy for crypto conditions. If BTC has been rising in recent weeks and looks like it's going to continue its current uptrend, then there's a high chance that the crypto rally you're watching will continue. The caveat in this case is that if BTC starts to go parabolic, this can cause altcoins to trade flat as investors drop them to chase BTC. Now, whereas the RUT is a proxy for risk appetite among investors more broadly, large cap altcoins such as ETH are a proxy for risk appetite among crypto investors specifically. If ETH has been rising in recent weeks and looks like it's going to continue its current uptrend, then there's a high chance that the altcoin rally you're watching will continue. The catch in this case is that you need to check the ETH BTC chart to see that. Now, to quickly bring you up to speed, the ETH BTC chart shows you ETH's strength compared to BTC rather than the US dollar. And all you need to know is that the ETH BTC chart should also be in a clear uptrend and should look like the current uptrend will continue, at least in the short term. And this further increases the chances that the altcoin rally you're watching will continue, as it suggests capital is slowly rotating out of BTC into altcoins. Similarly to stocks, how long a crypto will rally ultimately depends on how much attention and capital is flowing into that coin or token. Attention comes first and capital follows. Announcements around partnerships, upgrades, and exchange listings are just a few examples of bullish catalysts that can keep a crypto project in the spotlight for longer. Do note that you'll have to do the research to find these catalysts. Thankfully, there are broader crypto catalysts that can keep attention focused on the crypto market as a whole. Examples here include spot ETFs being approved and listed on traditional exchanges, regulations around crypto being dropped, and TradFi institutions announcing crypto integrations and partnerships. If the macro backdrop is bullish and there are bullish macro catalysts, and the crypto backdrop is bullish and there are bullish crypto catalysts, then this is essentially the most bullish scenario for the crypto market, as it's the most supportive of a rally continuing, and this is when prices can go truly parabolic. But remember how much and how quickly leverage can impact crypto prices. The longer that a crypto rally continues, the more that traders bet on higher highs, and the more that long leverage builds up. Eventually, this long leverage gets big enough that even the smallest dip can cause a big drop, and this makes it easy for crypto whales to trigger this drop to make money shorting the long liquidations. Usually, though, it's a slightly bearish macro or crypto catalyst that triggers the long liquidations, like inflation coming in higher than expected, or a spot ETF application being delayed or denied. This pin can be enough to pop the bubble, and the silver lining is that the resulting dip washes out all the leverage and resets both sentiment and positioning, allowing the crypto market to eventually hit higher highs. Speaking of which, it's extremely important to keep in mind how crypto market structure is changing over time. The more spot crypto ETFs get approved, the easier it is for macro liquidity to find its way into the crypto market. In turn, the more that cryptos like Bitcoin and Ethereum rally, the more they're used as collateral in CeFi and DeFi to borrow stablecoins, a crypto-native liquidity that goes into the market as well. And this begs a bigger question though, and that's how to tell whether a crypto rally is close to being over. After all, rallies don't last forever and nothing goes up only. It's a staircase of gradually higher lows and higher highs. Besides keeping track of the build-up in long leverage and different liquidation levels, the answer is to keep track of all the indicators we've discussed, be they macro or crypto related. If major stock indices like the S&P 500 and the RUT are starting to chop or even grind lower, the chances are then that crypto won't be far behind. And if macro conditions start to turn bearish, or if there is a bearish macro catalyst, then chances are crypto will respond quickly. Aside from the long liquidations this will likely trigger, capital tends to flee from risk assets first at the first sign of trouble, and that's crypto. Again, you can look at the 10-year Treasury yield and the Dixie to get a sense of how interest rates and liquidity pictures are looking. If they're both starting to rise, then this could be a sign that macro conditions are about to start turning bearish. But I'll reiterate that it can take time for this to be reflected in the crypto markets. First, you will see weakness in stocks and then in crypto, absent long liquidations and bearish catalysts. Now, it's a bit different when you're looking at the crypto indicators. That's because BTC can chop or even grind lower while everything else rallies. In fact, these tend to be the most bullish conditions for altcoins, just because if Bitcoin is flat, attention and capital tends to rotate into altcoins down the list. Now, to clarify, I'm talking about the short term. On the longer term, Bitcoin still needs to be in a clear uptrend. Logically, it's a similar story for ETH and even ETH BTC. If ETH and ETH BTC start chopping and grinding, other altcoins can still continue rallying as attention and capital rotates further down the list. But again, this is in the short term. ETH and ETH BTC need to be in the longer term uptrend for this to happen. If BTC ETH or ETH BTC start to drop though, expect to see an immediate end to the rally you're watching. And that reminds me, another telltale sign that a rally is close to being over is when bullish macro and bullish crypto catalysts are having zero impact on price or even resulting in a sell-off. Now, to be clear, this tends to happen during bear markets when both macro and crypto catalysts are bearish. If that's the backdrop, then it's normal. If it happens when macro and crypto catalysts are bullish, though, that's a red flag. Crypto selling off because of bullish macro or crypto catalysts when the backdrop is bullish is a clear sign that the current rally is coming to an end and could be evidence that a crypto bear market could be starting soon. And if crypto starts selling off on the back of a big bullish catalyst like a spot ETF being approved or some institutional partnership, then this could be a sign that the local or cycle top is in. Now, to wrap things up, I want to address one other topic that's top of mind when it comes to crypto rallies, and that's the idea of rotation. Now, for context, capital in the crypto market will rotate between cryptos and niches. For instance, it'll start with Bitcoin, then it will rotate into Ethereum, and then maybe into a niche on Ethereum, like DeFi or tokenized RWA cryptos, at least in theory. In practice, this rotation is a lot more nuanced. For starters, many crypto whales will borrow against their crypto holdings to buy other cryptos rather than rotate per se. And this means that a lot of rotation from, say, Bitcoin to Ethereum could involve Bitcoin whales borrowing against their BTC to buy ETH, rather than selling out of BTC into ETH. And the same is true for Ethereum whales rotating into Sol, and so on and so on. At the same time, this leverage-driven rotation tends to result in even more leverage. When Bitcoin whales borrow against their BTC instead of selling it, this means there is less BTC available for sale. And this means that supply is effectively restricted, and that results in Bitcoin's price gradually going higher as new buyers come in. And the more that Bitcoin's price rises, the more that Bitcoin whales borrow against their Bitcoin. And this leverage only gets amplified as you go further down the food chain. Bitcoin whales rotate into ETH, causing ETH's price to pump. This causes Ethereum whales to borrow more against their ETH, further restricting ETH supply, making it easier for price to rise as new buyers come in. The more that ETH's price rises, the more that Ethereum whales borrow against ETH to buy Sol, and so on and so on. It's a similar story when it comes to rotation between niches. In case you haven't noticed, everything in crypto involves finance, hence why we have DeFi, SocialFi, GameFi, and so on. What this means is that there's a common thread that unites all these different niches, and it's usually DeFi, specifically stablecoins. If you think about it, all of these on-chain use cases leverage stablecoins in some capacity. And this means that liquidity can move very freely between different crypto niches, resulting in a sort of rolling rotation rather than a sequential rotation. For instance, there's a rotation into AI agents because of some AI catalyst like GPT-5. Then there's a rotation into GameFi because of some gaming catalyst like video games utilizing AI agents. And then there's a rotation back into DeFi because some new DeFi AI agent launches. The result is a sort of a rolling rotation that looks almost like crypto is moving gradually higher, so long as it belongs to one of the niches that's adjacent to whichever ones are most consistently in the spotlight. It's easy to forget that this is exactly what we saw in 2024 when AI and meme coins were all the rage. Anyhow, the key takeaway is that you shouldn't get too hung up on the idea of rotation, as it's nowhere near as clear-cut as people make it sound. So long as you hold cryptos that belong to niches that are likely to get big and have narratives that are easy for investors to understand and allocate to, chances are that the rally will continue, assuming all the macro and crypto indicators and catalysts are aligned. And if you need help finding these kinds of cryptos, then be sure to check out our video on how to find 100x altcoins right over here. And if you're not subscribed to the channel yet, you can do that right over here. This is Nick signing off. Thank you guys very much for watching, and I will see you in the next vid.